Hello everybody, hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday, ladies and gentlemen, yes, the last trading day of this week. Now look, we're finished with all the central banks. This week, it was really bonanza, honestly, extravaganza, or whatever anza you want to call it, but anyway, it was all interesting to watch how all these central banks came out, how their leaders of central banks were talking about how inflation is now a big concern, duh. Anyway, look, we're going to talk about all that. We're going to pick up on the charts. We're going to see what's happening. Certainly, like I said, as always, stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Yes, the 20th, if I'm not mistaken, 20th of March, 2026. Ladies and gentlemen, I hope you're all having a wonderful start of Friday. I hope so far you had a good week. The markets were generous to you, I hope so. But certainly, yes, I can't say anything. It is difficult to navigate through these markets nowadays. So yeah, it's very important, like I said, to have a cool head on your shoulders during this period. Look, there is something that I'll mention in a moment about that. But before we go any forward, if we go any further, a quick mentioning of our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to put my usual good morning in the chat room. Good morning, everyone. There we go. Also, just gonna clear up a few things here and there. Yeah, just in order to kind of have a smooth sailing, well, hopefully, through the webinar today. Look, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. But there's one thing that I wanted to mention, and I did mention that in my previous webinars. It's the upcoming webinar right here. Basically, the webinar where how to position ourselves in these turbulent markets, and mainly it's about risk management for traders. But yes, we will talk about different strategies, different ideas. Also, this because it's a live session where questions are welcomed. Feel free to ask anything. We'll try to get to the bottom of it. So yeah, look. Of course, to ask something about trading and the financial markets, yeah, we'll try to get to the bottom of it. But I'm looking forward to seeing you in the webinar. If you don't see it on the main screen here on our Markets.com website, then you can go and click on Learn, go into Webinars, and it will take you to this page where you can just click on Register, and basically there you can register. Now look, certainly the webinar is going to be live. There will be a recording of it, so if you want to get the link with the video, you can always, like I said, we can always send it to you after the webinar. However, the benefit of attending the live session is because, of course, we can all interact. You can have your questions ready on at the spot. And I think that, like I said, you have to treat these webinars more like, not like that you switch them on and had a listen and everything. It's more of like for interaction. It's more for asking questions, more for just kind of trying to find out, an answer to something maybe what's bothering you related to the financial markets, of course. But look, tune in, yes, the 26th. Looking forward to seeing you there. Ladies and gentlemen, so I want to jump into the economic calendar because this week was quite a busy one, especially from the central bank perspective, because there were many of those coming out with interest rate decisions. Now, you know what? Let's run it through a little bit. Let's go through all of them very quickly, and then we'll jump into the charts. Now, Monday was a quiet one. We only got the Canadian inflation numbers, which came out a little bit on the lower side, which was quite interesting. But again, it's understandable because the numbers basically were for February. Now, look, I talked a lot this week about inflation in general, and from Monday, I talked in my Markets Talk webinar that, look, inflation is going to be a big concern. And honestly, like the central banks this week, all of them kind of confirmed that, because everybody understands, yes, congratulations. You know, we had, for example, Canada, we had the February numbers were like on the lower side. But look at this inflation headline year-on-year inflation rate 1.8 against the previous 2.3. Wow, like honestly, like this is really a lot to the downside. Now, I'm really curious. I'm really curious what kind of a number we're going to get in March with all these inflated oil prices, and I'm not talking about core. Core will probably stay somewhere like maybe around this, 2.5 or something like that, or maybe maybe it will come out as previous here, the 2.6, but previous. But the headline, now I'm really curious to see what's going to happen with the headline. I'm not saying that it should like rocket or something, but to come out above 2.3, look, come on. I mean, like, honestly, if it's not going to come out above 2.3, I really don't know. I mean, I might be losing kind of what was the word? I think for me the importance of these numbers are going to be even more diminished. This importance will be even more diminished because nowadays we all understand that the data kind of gets a little manipulated, and sometimes, if you don't need the central bank to go for a hike, you kind of present the numbers a little bit in that way, so that to show that inflation maybe is still okay. Well, of course, that doesn't happen. It's just theory. Anyway, look. For now, like I said, these numbers here, like inflation numbers, are going to be heavily watched next month. Really looking forward to those. But anyway, coming back to the situation with the interest rate decisions and RBA, and I said this before in the beginning of this week. I said RBA went for a hike. It went for the second hike, and again, this is where it's debatable. People might say, "Oh, but maybe they're hiking too early." Because you actually have to get the number out, to see that inflation is picking up. But on the other hand, if you kind of know already that this is going to be a problem, inflation is going to be a problem, then you go in like maybe a little bit more in advance. Because again, like I said, there's a lot of discussion about this. So, why to hike now if the inflation number, actually official inflation number, didn't come out on the higher side yet, and it's not like that critical yet. So basically, by hiking rates, you are removing the window of how many more rate hikes you can do. Look. Again, but on the other hand, you're trying to kind of maybe control that spending. That inflation might get out of hand. You're trying to control that spending straight away in order to avoid maybe bigger shocks in the future. And another very important thing is that every economy is different. So, what works for one doesn't work for the other. For example, for the ECB, it works the 2.15%, interest rate. For some, doesn't, So it's like, again, it's like you have to look at yourself. You have to look at what's best for you. And of course, there will always be critics, but in my opinion, right now, it seems like the RBA is one of those banks that has some sort of like common sense. So again, not trying to kind of suck up to RBA or something, no, but just in general, evaluating everything how it is. In my opinion, RBA is kind of the one that is currently the more. Maybe it's because there's less drama. in there. Yes, everywhere else there's like, it seems like too much drama, but like in this one, yeah. Anyway, so yeah, that was the RBA. 𝐓𝐫 economic sentiment came out from Germany. Look at this bummer. Honestly, look at this number, ladies and gentlemen. 𝐓𝐫 economic sentiment index. I mean, from 58 to 3 and 3 to 30, the forecast was 39. That was already like a terrible number. Minus 0.5. Okay. Anyway, going for further down the line here, Wednesday, of course, Wednesday, the big show was the Bank of Canada and the Federal Reserve. The Bank of Canada kept the rate unchanged, 2.25, but the Fed. Okay, look, this is what I wanted to talk about, and it was. I was on Wednesday. I was talking about this in the morning. I said that it might be a snooze fest, and it kind of was. Apart from the fact that Jerome Powell came out saying that he's not going to leave until there is a Department of Justice investigation, he might not actually leave in May. This is the interesting part. No, this is actually a big thing. And also, like, you know, he's not going to leave. That means that we're not going to see like rate cuts, probably. No, because again, let me just refresh this CME Fed Watch tool. Yep, we're not going to see those rate. And actually, look at this. The April meeting already has even a percentage for a higher percentage for a hike. Oh my God! Like this is now this is a drama. Now this is a telenovela. Honestly, the central bank telenovela. But this is the interesting part. Look, okay, the April one has a probability here, but it's not. It's just, I mean, it's still minimal. I think that by the end of the year, we're not expecting to see any cuts, any hikes. Again, in terms of hiking, unless inflation really starts getting out of hand, and we'll see that starting from next month, and then of course going into May as well. We're gonna see the April inflation numbers. So if those are really suddenly starting to rally rapidly, just maybe there is a possibility for this column here to, you know, to expand a little bit more here to the upside. We'll see. Again, I'm not saying anything, but it was really interesting, like I said, just to watch Powell's speech, and he looked a little bit more confident, you know, and he looked that he's prepared for a fight, and I think that this is the thing. And now this morning I already heard that they're planning to do another investigation into him. Like, honestly, like, it's basically because what? Because the dude didn't go for a rate cut as you wanted. Honestly, come on. It's like, I think that you should not. Anyway, yeah, it's a different world we're living in, ladies and gentlemen. Right now, it is a different world because, you know, how it's like everything is like everything is open, right? Everything is like all these like corruptive schemes, you know, these favors, favorable relationships, and you know, demands that are like without any hidden agenda. On one hand, it's fine, you know, it's great actually, because everything is out in the blue, because everything is just kind of at face value, you know. So yes, we have corruption, and yes, we're like laundering money through this and that, you know, through this conflict, that conflict, and blah blah blah. So we need more, we need more money now for, you know, for more bombings and stuff like that. So how about 200 billion, let's say? Yeah, so that's what I'm saying. So it's a little bit of a tricky moment, I would say, and for central banks, unless somehow they're maybe on you know, in all of it. I don't know, again, but this is like, but yeah, of course, the situation right now with Jerome Powell, if it is how it is, then certainly it's not the best one for him. That said, he is on the right side, in my opinion, but I might be wrong. More, like I said, more evaluations would be needed. But at what you can see right now, let's say, you know, because unfortunately we only judge what information we can get, in a way. So So if you're looking at it from that perspective, then yeah, it kind of seems like that he's a little bit on the right side. But again, there's a lot of different. There are a lot of different opinions, and of course, we all have our own opinions, so we can all debate on that. Let me know in the comments if you're watching this right now live. What do you think? What do you think? By the way, the Federal Reserve will go for a another cut this year, or actually, on the contrary, we could see a hike this year. Let me know if you're watching this right now. Okay, so yeah, Wednesday, that's how we ended the day, the central bank day. The Thursday, in my opinion, Thursday was the more interesting day. We had the BOJ, first of all, right? The BOJ interest rate decision came out. They're also worried about inflation. That's understandable. This is like not rocket science. Everybody understands that in April we're gonna get we should be getting higher number. I'm not gonna say will, because honestly, I'm always leaving something a little bit like an element of the doubt, and again, because nowadays it's really difficult to trust the quality of the data, and if it's not manipulated or not, because you need to continue showing that the inflation is still within target, or maybe like around there, in order to kind of justify spending and justify the lower rates. So anyway, look, for now, like I said, the BOJ interest rate decision came out. Yes, they kept the rate unchanged. Sanae Takaichi was very happy with this. She was probably not very happy with the comment made by the US leader about Pearl Harbor, but I strongly recommend to watch that. That is just wow. Yeah, have a look at it on YouTube somewhere. Like, honestly, it is just amazing. Anyway, so yes, then we had the SNB, Swiss National Bank interest rate decision. They kept the rate unchanged at plus 0%. Then we had the BOE. Now, this is what I was talking about in my recent videos on the central banks, and I talked about not the interest rate itself. Yeah, the rate 3.75, that's kind of already was given as a standard. Now, what I was looking at this. I was actually hoping to see a number here. So that's why we didn't see a huge reaction in the British pound to the upside, because I was like hoping to see at least one member here in the vote hike field right here. But all of them, apparently, they want to keep the rates unchanged. Fine. Look, they know what they're doing, hopefully. So I hope it. Like I said, for now, the market is the pound is actually just moving as it is. It's just affected by the US dollar mainly. If you're looking GBP and USD side. Towards the GBPUSD side. Oh, my tongue is spinning today, honestly. Like, really difficult to mumble these words out. So yeah, apologies for that straight away. And of course, then we had the initial and continuous jobless claims from the US, but then the ECB. The ECB kind of took the final. It had the final word on Thursday. So yes, interest rate decision, the same as previous, yep, 2.15. But then we had the press conference, and again, also they confirmed that they're worried about inflation, and it's interesting how the official wording goes in there. They want to, they don't want to sound too panicky. But they always use the words like the inflation expectations are tilted to the upside. Basically, I'm expecting higher inflation. Anyway, so yeah, that was Thursday, and today, ladies and gentlemen, we kind of wrapped up the day with the Chinese numbers, interest rate numbers. So the same. I said this before, and I'll say it again. I mean, for now, China is fine. They're kind of winning in all this right now, in this whole mayhem. So there's no reason to kind of make some drastic moves right now in the interest rates. And today, apart from that, look, Canada will release their retail sales, the preliminary numbers. some PPI figures as well here, so we'll keep an eye. But in general, of course, we're watching the geopolitical situation. Ladies and gentlemen, let's jump into the charts. Yeah, Nikkei 225, the first one. So I talked about this, and I said to you that I am watching this this upside line right here, which it could be a little bit of an area of resistance together with the 20-day SMA. So we did move lower. Yep, so far so good. This is working out nicely. Of course, the U.S. administration tried to calm the moment down in the markets, because yesterday the markets were not really feeling the love during the European and US sessions, and this morning we're seeing a little bit of a recovery moment, so in a way okay-ish. Gold was yesterday ripped apart. I'll jump into that, and everything is working out nicely on gold. I talked about it. Nikkei 225. So look, now what we're watching, we had this moment, we had this like reversal back down. So now the question is, can we break the 100-day EMA? And if we can break the 100-day EMA, if we can clear the 52,518 zone right there, then yeah, potentially more sellers here could join in. But to be honest, because this is a very, very tentative level here, normally you have a little bit more maybe like reassurance or something, but yeah, this one's a little bit more on the tentative side. So there we go. If we clear the 100-day EMA shown as the blue line here, then yes, I will lean further south. I will target the 200-day EMA, and then we'll take it from there. So basically, for further declines, I would prefer to see a drop below the 100-day EMA, and then we'll just take it from there. Very quickly on KOSPI, there we go. Back in, look, I think I cannot really talk about this as a range anymore. I think, or like, sorry, not a range, like a rising channel anymore. I have to kind of keep an eye on an upside support line like this. So taken from the low of the, what's the line here? Taken from the low of the ninth, there we go, 9th of March. So look, as long as we stay above this steep upside line, there is a chance for this one to continue further north. Shanghai Composite, boom. It looks like Asia has a delay in the, so today's reaction in Asia, it seems like it's like the reaction to what happened yesterday in the European and US markets. By the way, I need to refresh this very quickly. Yep. So yeah, so again, but for me, the more important part is that we broke the lower side of the range here. We basically came outside of the box. And we broke below the 4,000 zone. We fell below the 100-day EMA. All stars are aligning now towards the downside. I'm not going to say anything yet, unless if the U.S. and the European markets today, let's say, reverse sharply to the upside. I wouldn't be surprised if we were going to see, let's say, on Monday, the Shanghai Composite kind of maybe opening here back inside the box. I'm going to leave that element of the doubt here for now. So, I'm going to leave that idea, and potentially, like I said, potentially that this could happen. That said, if you entered on a sell here, for example, at 4,000, you're holding this one still. Look, first of all, I hope you're not, you know what you're doing if you're holding the index, or in general an instrument, over the weekend. So that requires kind of careful consideration. So if you're fine with that, then okay, I'm fine with that as well. So just that the most important, like I said, is that if you have entered, you're probably now in profit. So but this, in case it reverses back above the 4,000 zone, then yeah, certainly this kind of opens the door again to some higher levels. So we'll keep an eye on that one. Dow Jones Industrial Average. So there we go. Yesterday we reversed back, sorry, no, we didn't reverse back up. We did drop further. There we go. I'm just trying to see what's happening right now. Oh, gold is really recovering right now. I'm trying to see right now what's happening with Dow Jones Industrial Average, where we are at right now, 46,120. So yeah, above yesterday's close, that's fine. But in general, look, this idea worked out. This idea worked out because of what I said, that if we do drop and stay below the 46,494, I'm going to lean towards the downside. Did we get that break? Yes, we got the break. Fantastic. So long story short, for now, I am watching this very carefully, and look, I'm still bearish as long as we remain below the downside line, this steep downside resistance line taken from the high of the 26th of February. If we continue to trade below that, I'm going to lean lower. That said, if you're looking for some higher levels, then certainly a break of this downside line, the steep downside line, and a push above the 200-day would be required. The S&P 500, there we go. Yesterday we flirted with this 200-day EMA. We reached that because this was my goal. I said that if we do drop and stay below the 6,770 territory, I'm leaning towards the 200-day EMA. It took us a while, but we got there. So the S&P right now is sitting at 6,614. So yeah, above yesterday's close, but still not above this territory right there. So yep, this is what I'm looking at. Now, okay, look, what I'm going to say here is that if we do drop below the 6,550 territory right here, I'm going to lean towards the downside. And yeah, then we'll just take it from there. So long story short, these are the little areas that I'm watching here, but certainly something tells me that there might be a little bit of a rebound unless just a second. 6,500. Okay. 6,500 could be a nice, right? Okay, look, I'll aim for that if we do drop below the 6,550. Yep, I'll aim for that 500 level. But yeah, for now it looks like that there is a possibility for maybe a test of the 6,500. Okay, for now, look, I'm not going to say anything else. For now, let's be a little bit more on the careful side. And let's not overdo this, but certainly we are at a very interesting spot. We're oscillating around the 200-day EMA, and we could still be here. So don't do not get way too comfortable, let's say, with either the upside or the downside, because again, we have reached one of our targets, the 200-day EMA on the daily chart. And it's a critical point here, in my opinion, because if we do stay below this 200-day EMA, I think further declines here could be possible. Nasdaq 100, again, the same story. We reached the 200-day EMA, rebounded back up a little bit, but still we remained below the lower side of this box, of this range. So, long story short, I think that for now, we need to be a little bit more on the careful side. And if you're looking for some lower levels, my approach here would be this way, that I'll wait for a drop below the 200-day EMA, and then I'll do something about it. The German index DAX, by the way, with the upside on NASDAQ, look, if we do climb back above the 24,455 territory right here, then yeah, I'll get a little bit more excited with the upside. DAX, the German index DAX, yesterday, look at this, boom, to the downside. This was a disaster yesterday. Look at this. It seems like we would like to recover somewhat, and honestly, we could, in a way, but I think that we would need to see here in the very short term a push above the 23,180 zone right here. If we do climb above it, I will go higher. I will consider a little bit of a gap fill here. I think that this could be possible, could be a possibility. Let's see if it works out or not. The FTSE 100, ladies and gentlemen, yesterday, beautiful move to the downside. Boom, we broke the upside line. Look, I talked about this, and I said that we're forming something of an ascending triangle. According to all the TA rules, such patterns tend to break to the upside. That said, if we evaluate this as just as a triangle, we look at the prevailing trend to the downside, so the greater chance for this one to break out is lower. And there we go. We reached the 100-day EMA, the target that I had. So great, wonderful. More, sellers here could join in, and they did join in. So now the question is, can the buyers pick it up from this 100-day EMA, or actually are we destined for a further move south, maybe towards the 200-day EMA? Well, I'll consider lower levels if we do remain below the 100-day EMA. CAC 40, just a quick glance. Oof, nice, actually nice. I'm gonna say, if we do drop below the 7,768 territory right here, I'm gonna lean towards the downside. And for now, 8,066 is something that I'm watching. And then if we do climb above it, then I'll go from there. DXY, dollar index, there we go, ladies and gentlemen. So fantastic movement here. Very, very interesting developments. This upside line is something that we're watching, and honestly, the 98.70 zone right here is the barrier that I'm going to keep an eye on the downside. Again, the upside line together with this little hurdle. If we clear it, there could be a lot of bearishness here, and we could see a move lower within the range. Remember, I said that I'm still bearish on DXY. Well, there we go. I'm still bearish on DXY. I said to you previously that I'm going to target the 100.5 zone, tick. And then what I'm going to do is I'm going to target, if we see a strong hold up here, I will consider maybe a move back down within the range here. Because in general, if you look at this range, it is a bearish case here, because the prevailing trend was to the downside here. There we go, is to the downside, and there we go. The greater chance for this one to break out is lower. We had an attempt here, but failed. Well, there is still hope for the bears. Quick glance at VIX. Yesterday was a bit of a push higher here, but then there we go. We retraced back down. Anyway, let's jump into Forex very quickly. My beloved AUDJPY, ladies and gentlemen. Okay, beautiful test of this upside line. Fantastic. So I said to you previously that this upside line, if we do get a clearance of it, great, more sellers here could join in. But at the moment, since what? Since October time, mid-October of 2025, we continue to trade above this upside support line. And this upside support line is quite a strong one right now. So let's not underestimate it, okay? And we can see that, yes, it provided good support. If we break it eventually and we stay below it, yes, I'm going to get excited, a little bit more excited with the downside. For now, the upside scenario is still the more likely one. That said, if you're not comfortable with it right now, then you can wait at least for a break of this downside line taken from the high of the 11th of March. AUDUSD, okay. This one I like this one, and for now it's forming something of a triangle pattern. So we're waiting for an exit. And this is what I'm going to do. I'm going to wait for an exit here. Either a break through the upper side of the potential triangle idea here, the 0.7147, or through the lower side of it, which is this upside line. There we go. So this upside line is drawn from the lower side of the, the low of the 6th of February. And in a way, all of it is forming a nice potential, like I said, ascending triangle pattern, which according to all the here rules, kind of should break to the upside, but again, we've seen this happening in the opposite direction, so that's why I always suggest, ladies and gentlemen, wait for the confirmation break. By the way, whoever's tuning in right now, ladies and gentlemen, as I keep on reminding, these sessions are made for everybody, and if you have any questions, feel free to drop them in there in the chat box, and we'll go from there. AUDNZD, okay, so beautiful reversal back down, and again we confirmed that we love midpoints between Fibonacci retracement levels. There we go. Look at this beautiful hold up near the midpoint between the 50 and the 61.8 on Fibonacci retracement here, which is drawn, by the way, from the highest point of 2011 to the lowest point of 2020. There we go. Good result here. Let's see how far we can retrace back down here. Something tells me that there is a possibility to retrace all the way to the midline of the Bollinger Band, which is the 20-day SMA. Okay, let's jump into EURUSD. Yesterday, good volatility yesterday. There we go. Moved nicely, strongly to the upside. We've moved back above the 1.15 territory. Okay, look, at this point, if the US dollar, if the XY continues to show us, willingness to go lower, then yeah, I cannot really deny this, and I think that we could see slightly higher levels here on Euro USD. That said, I am being very, very much on the careful side, really trying not to overdo this, and I'm waiting for clearance of this downside line, all the EMAs on my daily chart, and then yeah, we could go from there. However, if we look at from the perspective of EMAs, well, the 50 now is trying to cross below the 100. So it's not really a very strong and bullish indication. On the contrary, it looks a little bit more bearish still. So after breaking this upside line right here, taken from the low of the lowest point of August of last year, we did come back. We tested the upside line from underneath, and now there's a possibility to see a move back down. Let's see if that's going to happen. For now, there is still hope for the bears. Maybe they will say, okay, we're going to enjoy the higher rate right now and just take advantage of it and just drive it back down. That said, if inflation is expected in Europe, and we do expect inflation in Europe here, so yes, I mean the euro might actually rally on that a little bit more. But again, like I said, I will start considering higher levels if we first of all climb back above this upside line. That's the first thing. And then we break this downside line, which is basically taken from the highest point of the current highest point of this year. Euro CHF, this one, look at this. I mean, I talked a while ago about this one, and there we go. This was a beautiful move. And what can I say? I think maybe further upside could be possible. But in general, the upper side of the falling channel broke, yep, and it opened the door to some higher levels. There we go. We cleared then the 0.1995 territory right there, and conveniently traveled to the 50-day EMA, where right now we're getting a little hold up. EUROJPY, this one's actually, I want to remove all the drawings. This one's coiling up. And it is getting into this position here where maybe, just maybe, we could see a nice little clearance here through one of the sides of the triangle. Going further down the line, ladies and gentlemen, just wanted to have a quick glance at EUROGBP. Now, EUROGBP is at a very interesting spot. Now, I don't like this pair, but occasionally I look at it and it presents some interesting opportunities. And one of them is right now, could be this one. So where a holdup is happening near this highlighted zone, this falling channel idea needs to go away, no longer needed. But we're now key area of support. And if we do clear this whole area, and by the way, I would say it's the 0.86 territory. So if we clear the 0.86 territory, I think that yes, there could be more downside to come. Let's jump into GBPUSD. So yeah, there we go. We cleared. We had a good move in general yesterday because I think that the bank just is worried about inflation again. This is positive for the pound, for the currency, and we got the breakout finally. So now let's see if we can stay. First of all, I mean, okay, so far we're still staying here above this upper side of the falling channel. But now let's see if we can go travel a little bit further north, because again, so far this is all working out according to the TA rules, because the TA rules states that if we are in a falling channel, we look at the prevailing trend. The prevailing trend is to the upside. There we go. There's a greater chance for this one to break out higher. That said, a confirmation break is needed always. So there we go. It seems like we're getting that confirmation break. So, but as always, nothing is guaranteed. Maybe it will just reverse sharply back down. Well, let's see, because maybe something will happen with the war again. and the US dollar will pick up buying interest, and we can scrap this whole idea. We can just in general scrap this whole idea. So yeah, looking at you. By the way, in terms of these little kind of shocks and moments, this is what I'm going to talk about in the session here, in the how to position your trades in these turbulent markets, because again, it's something that we need to kind of discuss, because yeah, certain models are not really working very well right now. So we'll see how that plays out. And like I said, hopefully you'll enjoy the session on the 26th of March. Okay, look, USD-CAD yesterday broke above the downside line, so kind of confirming that there is a wish to go higher, but the 100-day EMA, shown as the blue line, is providing good resistance so far. If we do get a clearance of the 100-day EMA, then yes, great. I think that the next target could be the 200-day EMA. USDJPY. There we go. We're rebounding beautifully from this hurdle. I talked, by the way, if you remember in the beginning of this week, I said that if we do drop and stay below the 159.45 level, my next target is the 157.72. Boom. Boom to the downside. Boom, we're testing this area. And now the question is, can we go back up? Look, I will say it this way. I think that I need to redraw some of the levels. I think that this level is no longer needed. This is what I'm going to keep an eye on. The 159.75. If we jump above it and stay above it, yep, I will go to the upside. For the downside, I would prefer again to say that if we do drop below the 157.72 territory right here, then yes, I'm going to lean towards the downside. USDCHF, okay, looking good here, and I would say this way that we're still getting a hold up below that this upper side of this rising channel, this downside line as well, by the way. But if all this breaks, now that's where it could open a nice door to some higher levels. Ladies and gentlemen, let's jump into commodities very quickly. Gold yesterday, look at this. I talked about, if you're, I said to you on Monday, look at this, keep your eyes on the 5,000 zone. If we do drop, first of all, I said to you last week that we're getting into a bit of a squeeze. It looks a little bit more bearish because we have our pole, we have our little correction here, consolidation moment. So maybe we'll get that breakout lower. There we go, boom, to the downside. We broke the, this area here. We stalled here for a little bit. And then, yes, it could just continue to slide. And honestly, for now, I would say this way that everything worked out according to plan. The 23.6 here on the Fibonacci retracement got reached. I'm very happy about this. The 100-day EMA, shown as the blue line, also got reached. We tested it. We actually pierced through it. We just slid further south. But today, yes, we are back above the well, actually yesterday, at the end of yesterday, we were already back above the 100-day EMA. Sorry, I need to correct my camera a little bit. There we go. So we're back above the 100-day EMA. We're currently just kind of stalling and chilling around there. Let's see if we can have enough steam to actually drop, or should I say the bears have enough steam to drop below the 100-day EMA. And, maybe then we could target the 200-day EMA. So, yeah, it's today's Friday. The beautiful weekly candle looks like this. The beautiful monthly candle looks even better. There we go. We reached, like I said before, we reached the 23.6. I don't know if there's going to be a stalling moment here, but certainly if we do clear the 23.6, then the next medium-term target, for me at least, is the area very close to the psychological 4,000 zone. Look, I talked about it, and I said that there is a good chance of reaching the 4,000 zone, maybe even the 3,600. Look, this is a good area of support right here. So, long story short, if you're looking for some kind of like lower levels, then in my opinion, there is still hope for for the bears here, especially if we clear this 23.6 here on the Fibonacci retracement. And on a daily, look, is the 100-day EMA. If we can clear that, great. More sellers here could join in. Silver, look at this. Silver also had a bloodbath here yesterday. We tested the 50% retrace. By the way, just to let you know, I want to jump into monthly chart. I have drawn this Fibonacci retracement from the lowest point of 2022 to the highest point of 2026 to the current all-time high. And I said to you, look, what comes up must come down. We already did 50% retracement. I'm not going to be shy to say that we might end up traveling maybe even towards the 61.8 or maybe even towards the $50 mark. This is something that I said before. I was talking about this at the end of last year when we were just crazy going higher, and then when we stalled a little bit here near the a little bit above the 100 level, then yes, the market kind of what's the word for that? The market really kind of started like correcting back down, because I said that if the times become difficult, gold and silver is not going to rally, because if the governments were piling up on on these precious metals, it was the perfect time to sell some. You sell some, you get some money which you need to support your economies during the kind of crappy times, and you can always restock on it later on. It's gonna it's gonna play out again, so why not to do that? So there we go. I think that this model is working, and so far, I think, like I said, I think I'm going to lean a little bit more towards the downside. But again, as always, I'm going to say, not everything is guaranteed. So just as always, it could still reverse sharply back up. So, but we're living in these markets right now. So, like I said, I'll talk about this in the session on the 26th as well. But keep your eyes on this. Like I said, it's very, very interesting. Platinum. Okay, look, this one's also declining. Everything's fine according to the rules. I talked about the 2,299 zone right here, the highlighted one. I said if we do stay below it, I'm going to lean towards the downside. Boom, fantastic. This is, by the way, the highest point that was reached back in 2008, before we had the financial crisis. There we go. Are we going to have something similar? Again, I don't know. We don't have the crystal ball, but something tells me that maybe it's going to be a little bit more on the moderate side. Let's see. Palladium, beautiful decline, beautiful move lower here, fantastic. We're surpassing the 50% here. My next target is the 61.8, roughly near the 1,350 zone-ish, somewhere there. And then we'll just take it from there. Very quickly on sugar. There we go. There we go. Look at this beautiful thing. I talked about this, and there we go. We popped above the 14.5 zone. We're now around the 15.5. I mean, this is the moment. There we go. This is the moment of truth. We had a great run here. Fantastic. Excuse me. We're reaching the key area of resistance near the 15.5 zone. So what can I say? For now, I'm just aiming for that, and then I'll just take it from there. Brent, WTI oil, ladies and gentlemen. Okay, we had some mayhem yesterday, and I actually want to pick up on Brent oil. Look at this. Yesterday, Brent oil spiked ridiculously to the upside here, and we came very close to testing this highest point of this year. Oh, my microphone. There we go, ladies and gentlemen. This is what happens. Apologies for that. Sorry for the maybe a little noise here, but knocked off my microphone from the table. Anyway, so look, yesterday we rallied like crazy. The spread between Brent oil and WTI oil was ridiculous. It was actually, it's not showing here, but it's showing me that the peak as 18.65. No, it was around almost 20. No, actually, it was 20. It was 20. So I don't know how this gets adjusted, but yeah, it was around 20. And honestly, I saw this myself, my own very eyes, and we were at this point where we were hitting we were going closer to 118. And then, yes, we just kind of started, you know, shifting, selling off, shifting back down. This was still sitting at what, at 100, and at one point there was a actually it was around it was around 98 or something like that. Yes, then that, and honestly we cleared this area on WTI oil. We pushed back above like the 95 zone. We cleared the 100 level by a little bit, but it seems like it wasn't enough for the bulls, and we started dropping back down. Look, what I really want to do on this one, because it's getting messier, I want to remove all the drawings and have a fresh look. So at this point, maybe we're getting something like a possible maybe falling wedge pattern. If that's the case, then we could expect higher prices here on WTI oil. So, but for that, I think I need to see a push above the 100 level. Then I'll be a little bit more comfortable with the upside. But at this point, while we remain inside the pattern, we could still kind of drift a little bit with a decline in this pattern. Yes, because it's a falling wedge. Look, the upside, there is still possibility for that, because they're not done with the conflict. They're, you know, the U.S. and Israel still continue. They still want to continue creating this mayhem, and you know, they keep on attacking Iran. They keep on attacking their facilities. And then Iran comes back and attacks, you know, the Gulf, the Gulf facilities of other countries which are friends with the U.S. and Israel. And then everybody kind of cries about it, you know, that, oh my God, like Iran attacked. I'm not really defending Iran here. They're also, everybody's like messed up in their heads. But if we're talking, you know, if we're talking kindergarten terms, right, then, well, you started it, you know, you first dropped a bomb on me. You dropped a bomb on my people. And, you know, nobody's dropping bombs on their people. It's just more like a, you know, they're killing girls and the boy and, you know, children. So what can I say? It's a little bit, you know, a little bit double standards here in my opinion. But anyway, let's see how this, of course, will continue. And at the moment, it's of course it is a little bit on the shaky side, and they just requested 200 billion for more military stuff. Like, honestly, that's what I said in the beginning. Like, you know, money laundering does not exist, right? It's just a fairy tale. And well, you want it or not, wars have always been profitable, you know, for a few. So wars bring problems to us, to mortal people, as I like to say. But for the higher ups, it's a great opportunity to make, you know, some good business. You know, because then suddenly prices are always inflated, you know, a little bit more. So that military fork becomes, you know, $20, you know, per piece, something like that, because it's a special one. Anyway, ladies and gentlemen, so yeah, keeping an eye on this one. The falling wedge pattern here looks quite attractive, but again, I need a confirmation break. Brent oil still, yes, looks quite interesting, and I talked about in the beginning of this week. I talked about that you know, we could go back maybe to 110 zone, maybe a little bit higher here. So we did that. So now, if you're looking for some higher levels on Brent oil, to be honest, at this point, I think the 119.5 break here looks a little bit more realistic. So if we can get a break through this one, then we'll get more attracted with by the upside scenario. But certainly we have to understand that, you know, this can reverse very, very quickly. So at the moment, it's very volatile. So I hope, you know, if you are trading these, then you know what you're doing. Natural gas, we're stuck. Look, I need a confirmation break above the 3.26 territory somewhere here. If I can get that move, amazing, more buyers. could join in. Ladies and gentlemen, let's wrap up this session with some cryptos. These are just up and down, up and down. We can't really figure out like what the hell they want to do, but certainly these things are not like really helping us out here too much. We had a good hold up near the 74, 75 territory. I talked a lot about this last week, so we had to move. Fantastic, great. We tested the 23.6 here on the Fibonacci retracement, which is drawn from the highest point of 2025. Is it? Actually, yes, highest point of 2025 to the lowest point of this year, and we did the 23.6 retracement. Now the question is, can we actually go lower? Now, I don't want to say anything yet, but certainly whatever's happening right now here, if we are, let's say, forming some sort of like formations, like rising channels or rising wedges, then yeah, we look at the prevailing trend, it is to the downside. So because on some cryptos you can see that clearly, you know. So Bitcoin Cash, for example, Bitcoin Cash did have a good move, but now it's resting on this key area of support near the 445 territory. If we do drop and stay below it, then yeah, I'll go lower. Ripple, for example, also it had a great run to the upside, but then kind of ran out of steam here as it seems. Look, if we're going to push back above the 200-day EMA, yeah, I'm going to get a little bit more excited with the upside, to be honest. 1.5125 here, I think that could become an interesting, very interesting target. Ethereum, good run, yes, but now look at this. We're back into the box. We're back inside the range here. So the question is, are we going to stay here actually, or are we going to somehow maybe climb back out of it? Well, I hope we will climb back out of it to the upside, but certainly the market doesn't always do what I want it to do. Ethereum Classic, just a quick glance. This one, look, this one is the clearest in my opinion. Went higher, tested the upper side of the box here in the range, drifting back down. Again, it's like I said, it's something that looks a little bit more realistic to me, and I really don't want to say this, but this looks bearish because look, if it's a range, we look at the prevailing trend. The prevailing trend is to the downside, was to the downside, so the greater chance for this one to break out is to the downside. Litecoin, similar story, kind of. We're moving back inside the box, and yeah, again, coming back to the Ethereum Classic scenario, kind of could follow suit. Dogecoin, similar story. There we go. We're drifting back down, but for this one, look, for the downside, I need to see a drop below 0.78 territory, somewhere around here. If we can get that drop, great. More sellers here could join in. Polkadot actually is looking quite bearish because it's forming. It likes to do these like bullish flag moments. Honestly, look at this. We had a push strong, push higher, then we retraced a little bit, and we formed something of a little flag here, and now we're also forming like something like a bullish flag. So, but either way, honestly, flag, no flag, 1.6950 or even the psychological 1.70 zone, a break of it is needed. If we can get that break, amazing, I'll go higher. And finally, ladies and gentlemen, Tron, one of my favorite ones lately, and yeah, this one's looking quite positive still. So, but again, I think it will fall a victim to, let's say, if all other cryptos start selling off, I think that it will fall victim to it, and it could actually drift back down, maybe closer to the 200-day EMA. But if we do pop above the 0.3093, then yeah, I'll go for some higher levels towards the 0.3208 zone here, marked by the highest point of January of this year, or should I say the current highest point of this year. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. As always, don't forget to go in and subscribe to this webinar right here on the 26th of March, and you know, I'm hoping to see you there. I'm hoping to get questions from you. So ladies and gentlemen, let's have a blast, let's have a great session then. But certainly thank you very much for attending this session, and I'll see you on Monday. I'll see you on Monday. I'm just double checking. Yes, everything's fine on Monday. It's the 25th that's not going to happen. So yes, on Monday I will be here with my Markets Talk webinar. So ladies and gentlemen, stay safe as always. Yep, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. Have a beautiful remaining trading day, and of course, have a beautiful weekend as well. I'll see you on Monday. Bye bye.